Trading Market Technicals morning call video for Wednesday, June 25th. Red across the board. Dow Jones took it on the chin, down 119. Nasdaq down 18. S&P down 12 and a half, almost 13 points, and a Russell down 11. So just under 1% across the board on some of these key indexes that we follow. And it all had to do with energy, really. Let's backtrack a little bit. What started the little bit of a sell-off, the intraday sell-off that we did have, was we had a real bad bond auction, and then we had tensions escalating yet again in Iraq, and some of the rebels taking some key hold of some cities in Iraq. So lot of geopolitical risks out there. So I would be very, very careful. And I've been mentioned, hey, take a cautious stance for weeks and weeks on end, and only because you have to, red flags and what's going on around us. That doesn't mean that we want to short the market, but we want to just be cognizant of what's happening in our surrounding areas while we're trading. Now, also, is energy. Yesterday, energy took it really on the chin, down about 2%. A lot of the energy stocks, and you would say, well, why? Why did that happen when we have tensions escalating? Well, actually, crude oil was down yesterday at one point. And that's a good question, and I've gotten a bunch of questions. I'd like to answer that. In a usual case, stocks, whether it be crude oil, oil stocks, or even gold stocks for that matter, they usually take a leadership role. They usually run first, and then the commodity goes and follows, and then becomes the leader, and then everything what crude does, then the stock would do in relationship. But what happened is that when you have stocks, oil stocks, really rallying since the early part of February, that's really what's been putting a bid into this market. Is one of the key sectors is oil, right? We have banks, banks and financial, another key sector. We have technology, which is another key sector. Transportation, another index. But within that, you have, the airlines, you have the truckers, and you have the rails. So these all make up key important sectors that actually gauges a real healthy rally in the marketplace. And then, crude being one of it, that just has gone parabolic. The oil stocks have gone parabolic, and they just decided to roll over. And that really put pressure on equities yesterday as well, along with the tensions in Iraq and, of course, a bad bond auction. That put a bid into bonds itself, the ZB, which I'll show you. So you have to kind of put everything in perspective. So what I did was, I've been staying away a lot from indicators because they've really been telling me everything that we already know, that we're grossly overbought. There were some divergences, but nothing really real to show you and to share with you in a short video. But I do have a couple of these key indicators that show divergence now, and that's where we have to really use caution. So one is the McClellan oscillator. No divergence, but I just wanted to show you that in order to get really oversold, it would be somewhere down below the negative 80, and we have plenty of room to go down there. So as you can see, pretty much most of 2014, let's get to March here, we haven't gone anywhere. We've just been really been chopping around within this Bollinger Band of the McClellan oscillator. So it is kind of quiet in the McClellan oscillator, but I just want to show you there is plenty of room to run before we become oversold. Okay, now let's go into some of these key indicators here. This is the New York Stock Exchange Advanced Decline issue. Good gauge of breadth of the market, and as you can see here, we have divergence. We did not make this. It didn't even touch the high. We're making lower high from this previous high, and markets have making a higher high from the previous high. So we have divergence within the market itself. So this is a key indicator. It's something I like to watch while we're trading, and this is the end of the day. But you can see here we have divergence here. And the other one is the New York Stock Exchange new 52-week highs. And I've showed this to you many, many times throughout the course of the year. But I want to show you how we did break back up, which was a good sign. But we need to stay, if we're making new highs in the market, we need to have stocks make new highs, or at least match the new high, the previous high. And that's not happening. We have another lower high from this previous high. So we have yet again divergence. So you have to be cautious here because the markets are grossly overbought. I do want to tell you that we're coming into a couple of weeks of strength going into July. You have a good few days of June, the last couple of days of June, and a couple of weeks of July. You get that decent holiday sort of rally, and then we become weak. We get into a seasonal weakness time going into pretty much chop around most of the summer to down, and then we have again, as you know, September, October could be notorious for sell-offs, and then of course we get the Santa Claus rally supposedly. So let's keep an eye on it because we haven't had a real good correction, and if we do not have a correction at all summer, rest assured, I believe that we would have a real nasty correction going into that seasonal weakness time of the month, which would be September, October. But again, it's way out there, but just want to point that out to you while we're talking about weakness and strength of seasonal periods. All right, so all about energy. We have the crude oil, as you can see here. Really didn't do much of anything, but we're at the 1272 extension. I would not be surprised if we blast up to the 1618. If we take this 110 out, then I think you're going to have a beeline shot to 115 in crude oil. That would definitely hinder and hurt any further rallies to come in equities. Now, and this is why I'm showing you it's all about equities. Let me just show you XLE. ETF of energy. I mean, it's just gone parabolic. And when you see the 8 start get away from the 8, that's your cue to say, okay, caution is definitely warranted now. I'm already away from the 20. Forget about the 50 and the 34. But we have this trend line here that we're so far away from. Logical spot would be a pullback to the 20 or the 34 and then resume its rally. In the longer term picture, this is still quite bullish. Remember, one day does not make a trend change. It takes several days to make a trend change, and this is only one day. And usually when you get a big move lower like this, you usually get a candle that takes back at least 50%, or at least you want to if you're a bull, and then the next day obviously resume the rally. But if that does not happen and we take back just a portion of it, that could be a cue that we're going to see some further weakness in energy. So just keep that in mind, which would hurt U.S. equities as well. Okay, some of the stocks in energy that really took it on the chin, APA, as you can see. You'll see they're all the same, DVN, CVX, right? And then you have the refiners, Valero, you have Marathon Oil, MRO, Halliburton, which is oil services, BHI, Baker Hughes. So you see what I mean. You'll see that they all sold off pretty hard, hurting energy. What do I do like? Well, the theme still is intact. I do like the builders. We had some good housing numbers that have been coming out of late, and I like Lennar. And Lennar stood there. Now remember one thing. If the market does decide to sell off, they are going to get hit along with the market. Okay, so you have to realize that. Just because we like the setup doesn't mean that it's going to follow through if we do get a rollover in the marketplace. But it's definitely one to keep on your watch list. Toll Brothers, TOL. You'll see they were all up at one point. They pulled back, but they kind of held pretty good during the day. BZH, Beazer Homes. You can see this one I like coming out of a long base. Pulte Homes, PHM. Okay. Interesting. Costco starting to look pretty good here. Just saw that on my scan last night. NTAP is something to watch. They had a conference, and they were looking for further weakness. Some of the analysts, but they actually guided higher for further earnings. So this is actually pretty good. Now, obviously, it's sold off again, but this is something to watch coming out of this symmetrical triangle, at least to the 200, then look further. But look at this thing has gotten decimated, and this is what I'm looking for: stocks that have based rounding bottoms, symmetrical triangles at the lower end of their base, because this is something that I would be interested in if the market starts to rally again. This is something that I would go to, especially when you have a little catalyst stating that we have a little bit of a surprise for you, that we are coming out with some better earnings. They pre-guided higher, so that's good. That's good news, and this is what you want to look for. You want to look for stocks that have been rallying, and that have gone parabolic and looking for an entry. You do not want that. Okay, so let's go into some of the indexes. Japanese yen, spot yen, as you can see, doing nothing wrong here. We do have this cluster that's been capped, this move, all of January, all of 2014. So we're going to want to see a break higher, at least to this 200. Again, if that happens, it's inversely correlated with U.S. equities, so we see weakness in equities. Okay. Now here's the bonds. I do think the bonds go higher, and I think they're going to test the the 1618 of 140.26. That's the measured move of the inverted head and shoulders that I showed you many, many times back in here. So I do think that they move higher. And as you can see, even though we had movement higher in equities, bonds did not go anywhere, sitting above the 200 here. So this is quite bullish. And again, longer term picture, yeah, I do think bonds go lower. But in the short term, until we get a decent pullback, I think bonds at least take a big spike higher, and then we would reevaluate it. Equities, U.S. equities, minis, 1618. We tagged it. We got above it. And again, this here to me is grossly overbought. We're fairly valued in U.S. equities, so there's really nothing here to buy unless you're just a trader and taking a bigger picture, saying, FOMC, Fed Chair Janet Yellen and company are going to continue to pump liquidity into the marketplace, and that's the only reason why you're buying equities, up at these levels here, okay, for a trade. Transports, as you can see, lower high from the previous high. I think it matches at least to here, if not lower. I think right around the 143 area. And then, of course, the 50 would be tested. And if that breaks, then, of course, the lower trend line. I think that would be the extreme, would be the lower trend line, because as you can see, the transports is making higher highs and higher lows. Quite bullish here, along with equities. But let's just take it one step at a time. I think you get to at least that 50-day moving average, and then we would reevaluate it. And then diamonds, as you can see, really took it hard here. Got to the 20-day moving average, and let's see if it gets down and breaks down to that 34. Okay, and then we have the IWMs. Really had a big move the last 2 weeks of trading, and now really it was down one of the worst indexes yesterday's price movement than all the other 5 that we follow. But again, as you can see here, the markets are tired. I mean, they're just you'll know what I mean if you're in front of the trading screens all day, the monitors all day. You'll see the markets are very tired, but they just continue to rally, and the algorithms continue to push this market up and up and up. And one day, when they turn to the sell side, there's going to be nothing here on the bid side because their buyers have already been exhausted, and that's what scares me. So that's why I use caution. Trend is your friend until it ends, and right now the trend remains up. Okay, one day is not a killer here for this market move. Okay, and lastly, the Qs. And guess what? We did take that 1272 extension literally to a penny. Just about a penny. We tagged it to the penny. 93.57. Okay, so we did hit that 1272 extension. It looks like the NASDAQ was breaking out up until the sell-off, and then we rolled over. So, again, word of caution, use caution. Look to buy good quality stocks that have been basing. Do not look to chase stocks that have been up 20, 30, 40, 50%. It's not worth it. And again, let's see if this one-day price movement gives us anything to the downside. Okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.